Today's video is all about TARAXA. TARAXA is an EVM-compatible smart contract platform based on a T-graph consensus utilizing block DAG, enabling Web3 to solve real-world problems. Guys, today's video is all about TARAXA, and we're going to be doing a deep dive, looking into some of the fundamentals, tokenomics, the team, and all about TARAXA. So you know what? Let's talk about the news, let's analyze some charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. Here on the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And of course, today's video is definitely a potential opportunity here in this crypto space. We do have a lot of small projects coming about, offering some real good solutions, and TARAXA could be one of them. Guys, you know, I'm very excited about this project. I did do a deep dive. I've been looking into this project for the last couple of days. I've been like an investigator in the last couple of days so that you guys don't have to, and I'm definitely here to report my findings. TARAXA is pretty interesting, guys, pretty interesting, and of course it's part of some big narratives, and it's definitely getting a lot of hype, a lot of interest, and I figured why not get some real information here as best as we can to navigate this project as best as we can. All right, let's get right into it. We can see that overall the website is here. It's well established, it's well made. I like the overall design. I've been playing around with this website for the last couple of days, and for the most part, it is very well designed. So with that being said, we'll use the website as a way of navigating this project, and we can go through the website ourselves and kind of see where this website kind of takes us, very organically. We see a few links here, some of the partners and, people involved into the project. We'll get into that in a little bit more detail soon. And then, of course, right into its benefits. So if we kind of look at some of the statements here, TARAXA's unique T-graph consensus. Okay, so it's a combination of basically proof of a stake and some other technology, honestly, that I'm not very familiar with from my behalf. And of course, there's a lot of research still to be done at low levels if you're very interested in. But in this video, I'm going to do a very just a broad overview and keeping it real for the majority of us that want to get in, and the mass adoption that this project needs is the majority. So at the end of the day, what I'm going to try to do is keep this very layman's, keep this very basic, to the point that we can all understand and get the gist of it. So T-graph is basically a combination of proof of stake and some other technology that they use, and it's called I have it written down on the infographic, guys. I'm going to post that infographic that I have for you guys on the social, so feel free to join that Discord. High quality infographic will be there to kind of summarize all my findings, but nonetheless pretty good. So another interesting aspect that it involves block DAG. Okay, it involves block DAG. If you heard of the DAG wars right now, there are a lot of blockchains right now that are integrating DAG, which is different from blockchain technology. It offers some benefits, of course, and value propositions are there for a lot of these layer ones that are coming out with block DAG. They're basically comparing the blockchain and saying that DAG does offer some benefits, and that's great, guys. Of course, we're healthy competition just drives more innovation. And with that being said, you can see that below we have a comparison with Bitcoin and Ethereum, and then you have TARAXA. Of course, the TPS, transactions per second, are very high with TARAXA. The latency is very low, and the finality is very low, 4 seconds, 1 second. And here we're talking about some improvements to the trilemma. Okay, a lot of these projects, these layer ones, want to focus on the trilemma, and of course TARAXA is another one, right? So the trilemma is becoming a very overused concept here. It could be an up-and-coming narrative, of course, and it's definitely something that a lot of these layer ones are focusing on, and TARAXA is no exception. Okay, so that's a good thing, a very positive thing. Without sacrificing security or decentralization, TARAXA is achieving such really good goals for their network, so that's great. Another good positive thing here for TARAXA, guys, I can't stress this anymore. EVM compatible network, guys, this is great. What this really means, again, I'm going to try to keep this very layman's and keeping this very basic for everybody that comes here to the channel that wants to truly understand what's going on here. EVM compatibility just essentially means that it's written in the same language that Ethereum projects are written in. Okay, so essentially using Solidity, and in that way, the projects can be deployed on both TARAXA and Ethereum, right? So if you're on the Ethereum network and you have a project that you want it to be basically hosted on the TARAXA network, guys, guess what? You can take that project because it is EVM compatible and just make it work on TARAXA. So guys, that is very, very bullish. You know, the barriers to entry in this case for projects that are already built on Ethereum are very little to none, right? Little to none. They can basically be transferred right over, and because it's EVM compatible. Okay, so that's very positive, very, very positive, and that could spark a lot of deployment of projects onto the network, given that there's a very little barrier to entry here for those Ethereum projects. So that's very good. Low cost transactions, of course, we're all looking for that. No network congestions, of course. You know, the seconds and the finality and the, you know, all that good stuff. The transaction rate is pretty near instant, so that's good. And true decentralization, truly permissionless network where anyone can be a validator. It even runs on Raspberry Pi. Okay, so that has nothing really to do with decentralization. However, guys, you know, there's a little bit to be said here with regards to decentralization, and of course the tokenomics and all of that good stuff. For me, that's going to be the bread and butter of this video for the most part, because the rest of it is squeaky clean. You know, this project has some really, really good aspects to it, and of course I'm going to spend a little bit more time on the aspects that need to be untangled, and of course that's going to be regarding a bit of the decentralization aspect and the tokenomics, but we'll get there bit by bit. We'll rely on this website to kind of take us there as we see fit, right? AI-enabled Web3 ecosystem. Okay, so right now the ecosystem is there, of course, but the main projects that are being built on the network right now is Hype. This is what they have. It's a social type of campaign network type of thing where people that basically go and socialize get rewarded for being, you know, high quality contributors, basically. Hype. Then there's a Trend Spotter, which is a new project that hasn't been released yet. It's coming soon, and that is another one that seems good because you can spot trends in the market in social media and social aspects. So for me, that's a good thing. And then an A-Power decentralized social listening and analytics powers Hype and Trend Spotter. So I don't think this is out. I think this is still in the works, but the rest of it is pretty much you know, in and out. TARAXA's faucet. I don't even know if you want to include this because Chainlink is just an Oracle, and of course a lot of EVM compatible projects use Chainlink as their Oracle. So, and Unicast is another project. It's related to spirits and guaranteed by on-chain sensor signals. So basically looking at the casing of spirits in Japan and things like that. So a very supply chain management type of project. So there are some projects being built. Some of them are not released just yet. Some of them they're in their infancy, of course. So we got to keep an eye on this. We have to understand that TARAXA is still very, very new. Okay, it's still very, very new. We're going to look at the tokenomics and look at its market cap, and you'll realize that this project is still very new. However, the fundamentals are still, at its age, they are very decent. Okay, so let's continue. Yeah, cool. Stake on TARAXA, of course. You can become a validator, and the total staked right now is, you know, 1,593 million Terra tokens, so that's quite a bit of tokens. Staked yield 17.6% staked, and validator commission is approximately 2%, and the staking ratio 41. So if you're interested in this is important. This has a lot to do with the tokenomics that we're going to get into a little bit more, and I feel like a lot of us here that are looking for TARAXA have a bit of ambiguity with regards to its tokenomics. It's very vague, and of course, you know, that's what we're here to try to do, is untangle some of this vagueness. Development roadmap, pretty good roadmap overall, very clear. You know, trying to build different dApps, like we mentioned, Echo and Trend Spotter, onboard more dApps. One thing that I wished they would mention a little bit is the direction with the foundation that they have, the TARAXA Foundation. What is the direction? What is the future application? Like, are they going to eventually become a DAO? This is something that is just being whispered about on their socials, like Telegram. Guys, yesterday I spent a significant amount of time on Telegram late at night trying to get a hold of somebody of the team. You know, the team member that helped me was amazing. It was great. He was a great guy, very informative, very patient, and to the point that I I took a very layman's approach to my question so that he can speak to me like a 5-year-old, and he did a great job doing that. So that was great. But the only issue that I have with the is that it took about 24 hours to get a hold of somebody. So it's not their fault. Of course, it's a very small team. They don't have a communications, someone that's dedicated to communications, or a team that's directed to communications. And I have a little bit to say about that going forward. And we'll talk about that as we enter the tokenomics aspect, because there are aspects of the project that need to be clarified and updated. And of course, if you don't have anybody there with regards to communication, updating websites, updating information, and making things a little bit more clear and transparent, there's a lot of questions coming about. And then we do get a lot of, let's say, anxiety on some of these social media platforms, especially the community platforms like Telegram and Discord. There's a lot of tension because there's a lot of ambiguity, and there's a lot of people talking about things that maybe they're not up to date with, or maybe they are, and because of that ambiguity, there's tons of tension. So we need to really get that resolved, the tension with regards to the details. The roadmap is good so far. I really do believe that the roadmap is doing well. They're clicking a lot of those check boxes, but again, a bit of transparency with regards to the foundation. Learn more, of course. Become a validator. Of course, if you want to become a validator, there's information there. Terra token, we can look at that development roadmap. We got a little bit of a sneak peek above. We can go check that, but I really want to see what this is. Terra token info. Fast, okay. Cost green price. Okay, market cap. This is the this is the market cap right now, 25 million in circulation. Okay, and staked and supply. So if you look at some of the tokenomics in some of the white paper or some of the documentation, they mentioned that there's only 10 million. This is a problematic thing, right? Because there is more than 10 million. And this is some of the things that a lot of people don't understand, is that when you're talking about proof of stake, a lot of the times they are inflationary unless there is a mechanism to reduce the overall circulating supply, like Ethereum has a burning mechanism that reduces the supply. And TARAXA right now doesn't really have anything like that, right? So, and it tried to really replicate the Bitcoin model, where there, over time, the emissions does get reduced, right? So essentially the halving for Bitcoin, you see that the amount of tokens that enter circulations get reduced over every 4 years, give or take, right? So they're trying to do a very similar thing here, how to reduce the overall emissions, not supply, because the supply, this is an infinite supply. So the max supply is infinite, right? So that's problematic. A lot of people look at that as a negative, and it is a bit of a negative. Hold on, but it's a bit of a negative. But if they would have explained it a little bit more properly and clearly to those individuals that are coming to this space that are newcomers, and believe it or not, you want these newcomers to be comfortable with some of these tokenomics, because they are the ones that are going to create mass adoption. Okay, so the idea of requiring somebody to really be a technical, tech-savvy individual now needs to stop, and a lot of these projects need to deviate from that mentality, because it's the same resistance that we're getting with wallets, for example. You have to be so tech-savvy in order to use cold storage wallets, and a lot of people feel fearful of getting an anxiety of getting into cryptocurrency because of that wallet. Now, if there's that much resistance and that much friction, when you go read a website and there's a lot of uncertainty and things are not clear, you're going to expect the same, very similar or analogous to the wallet scenario. There's going to be friction, right? There's going to be friction. So what we really want to do is unpack this so that we can understand. Right now, their initial minting, there was 10 billion units, okay, when it first was minted. Now there's over 10 billion. And this is because of the emissions due to the 20% yield that they are offering for staking. Okay, so this is something important. As you become a staker, okay, you are going to receive yield. Yes, it's 20%. Yes, it's nice. It looks great. But the reality is that emission is going to be incurred, and it's going to be added to the overall supply that is in circulation, guys. And that's what makes it inflationary. So this is something that we really have to understand. A lot of people are going to, and I've met some people on the Telegram that say, well, as people start staking, basically they're taking tokens off of the market and therefore decreasing the supply. And I truly understand that, but that's not a mechanism. That's the invisible hand doing its thing based on supply and demand and interest within the project. But as soon as something happens, those tokens can be unstaked and sold and dumped on the market. Now, I'm not saying that's going to happen. I'm not trying to spread any FUD here, but we got to be real about them. Those, although they are staked, they are very liquid. They could still be sold on the open market. So we have to understand that unless there's an actual burning mechanism, TARAXA is going to be inflationary. Now, with that being said, now I don't have any graphics, so I know I'm kind of just hanging out here for a little while. And I'll repeat this a little bit more as we get more into the website and as we get into my infographic. We'll talk about this a little bit more. But we have to understand that their plan right now is to eventually have the emissions, the yield, eventually decay over time. Again, as time passes, for the yield that an individual can basically get rewarded will reduce over time, and in using that model, or a model like that, will eventually cause the emissions, okay, or the yield, or the amount of tokens that are entering the market through that yield, to be decreased over time. And for me, that is okay. It's a great thing. Very similar to Bitcoin. If you look at the Bitcoin chart, or the rainbow chart over time, or the distribution chart of Bitcoin, let's put it that way, you're going to see that Bitcoin, eventually the supply goes flat, but it's not absolutely flat. It becomes so negligible, the amount of tokens that enter the market, that it won't have an effect. And in fact, at that point, the amount of tokens that get lost or stolen, or whatever the case may be, will actually cause Bitcoin to become more deflationary because of that aspect, right? More tokens are almost kind of being burnt, not secure, but burnt in a way, because they're lost. Now, TARAXA, the Terra token in this case, doesn't have a mechanism other than just somehow they are planning to, we don't know how just yet, to reduce the emissions in a decaying fashion. Okay, so that's very important. And we're going to talk about these plans, but these plans right now are a little bit iffy. We'll talk about this more. We'll touch upon it more and let the website lead this conversation. Let's continue. Wallet guide, if you're interested in a wallet, quarterly token update, that's great. Explore, you can go check the the wallet transactions on the Explorer. Where to get Terra, we'll talk about that. Not major exchanges, it's on KuCoin, I think, Mexi, but we'll get into that. So that's this page, pretty good overall. Stakers, wallets, Explorer, fine. Developers, run a node. The T-graph consensus, let's look at that. Okay, so this is a little bit more important because we're talking about the technicals here. We want to know what this project is all about and what makes it different from other projects, other layer ones that are out there, and how are they going to be competitive in this market. And of course, we're looking for specific value propositions. And we had one already that was EVM compatible. For me, that is amazing. That is great. Of course, we got another one with the speed and the congestion and all that, the finality and the TPS, all that good stuff is amazing. But what we really want is a little bit more clarity about this T-graph consensus. Basically, it is a combination of proof of stake. And now here on the channel, on the website, it doesn't really show the actual language. And I would have liked that. Now you can get into a deep dive here. You have white paper, of course, developer docs, development roadmap, become a validator. Let's see what this white paper looks like. I wish you wouldn't change their website. Let's open it in a new tab. And let's go back here so we can leave ourselves on that page. And this is the white paper. Now it's a fully fledged white paper, lots of details, everything you need to know. But of course, there's still ambiguity with regards to this tokenomics. And I'm going to tell you why. It's because, and this was told to me by a team member, that there are some aspects of the tokenomics and of a lot of the information that exists online is not up to date. Right? And that's problematic. Again, we need current, up-to-date information. Now, I'm not trying to be harsh on them, not whatsoever, because I understand small teams have limited time, limited resources. But nonetheless, if you want the mainstream society to get into this mass adoption phase, you're going to want to have a lot of these, I's dotted and T's crossed. So let's continue here. Smart contracts, if we install a node, vision, layer 1 tech, and the token layer 1 tech. Let's see what we have here. Scalability, the trilemma, we talked about that. The block DAG of the DAG wars, the overall technology behind its implementation it's a DAG, right? So it doesn't run by blockchain. It's a totally different it's a totally different structure or model. This we talked about already, proof of stake. So this is how it works, really. It's a proof of stakes, but it's a combination of proof of stakes and this, VDF and VRF and things like that. This is very, very, very technical stuff here, guys. Obviously, this is why I try to do this research for you guys so that it becomes simple for everybody. But at the end of the day, there's some levels of technicality that we kind of have to take it for face value, because we don't all have computer science degrees. So on the channel, I'm going to make sure that I kind of keep it simple and layman's for everybody to understand. But we really should focus on the fact that it is a proof of stake mechanism that's right here for. At the end of the day, what happens is that you basically stake tokens on the network, and you get incentives for doing that. Okay, so that, for me, of course, there's a lot of negatives and positive between both consensus. Proof of work is a more of a traditional approach, and a lot of the layer ones are still hinging upon the proof of work, making it a very decentralized type of network, of course. And then the proof of stake being a little less decentralized, but offering other benefits. Okay, so do your research regarding the difference between proof of work and proof of stake. Their decision to go proof of stake has a few implications. Of course, the SEC, a lot of layer ones are not interested in proof of stake because the SEC is looking at proof of stake as a potential model for a security. That's plain and simple. Okay, so I'm not saying that it is a security. I'm not saying any of that. I'm just saying that is the framework right now when you talk about proof of stake, right? So that's pretty good overall. This is what they're up to. At least they know what they're doing. ERC20, today's DeFi protocols, they're ready for all of that. What else do we have? Okay, so that's pretty good stuff. And they talk about thus far copying the use case of Ethereum has provided. So they're basically trying to go head to head with Ethereum. And I do respect that. Of course, Ethereum has its issues. And of course, the trilemma is one of them. And they are trying to bring a better solution to the market. So that's good. The Terra token, let's see here for sure. We'll get a bit of the tokenomic links, economics. Maybe we'll do this in a different tab. Terra token information, unlock schedules. Let's see where this takes us. And let's go through some of these tabs. Economics. Okay, so here we have the token distribution, and this is where the biggest ambiguity ever comes, because for me it's like, what is this? What is all this? And number one, the numbers are outdated. These numbers don't really make any sense. There's a bit of ambiguity here with regards to numbers, and some of it, obviously does make sense. A good thing is the seed sales, private sales, public sales. Now, I just want to quickly go to this website for a second. This website right here, let's get rid of this. This website right here does a good job of simplifying and making some graphics here to make it easier to read and understand. But nonetheless, it's pretty much the same thing as to what we were looking at. I like this, that this is not available on the website, so we'll kind of go back and forth. But if you look at this chart right here, you can see that the seed, private sales, and public sales right now, which accumulate to approximately 30%, give or take, they are right now basically unlocked. They're done. Basically, they're all in circulation. Seed and private sale round took place in 2018. Public sale took place in March 2021. There's no mention of that here. Unfortunately, it should have been. Network operators, we'll look at it on this website. So TARAXA's team members, TARAXA's foundation, community exchange deposits. So this is good. Private sale took, so a lot of good info here. What I really want to talk about is that TARAXA's team members committed to long-term success of the network and will hold their token allocations for an extended period of time. So there is a vesting period for team member tokens, which is the yellow part. That's 15% for the team. We got to understand that that's the reality. Everybody's got to eat. Okay. Is it too much? That's up to you to make that decision. It is in a distribution, in a release period or an investing period. So expect token unlocks and don't expect the team to dump. Hopefully not. That's not what we're talking about here, but that's the reality. Once they do enter circulation, they are open to be basically issued to the free market. The TARAXA Foundation intends to keep certain number of tokens indefinitely. Intends. These words basically insinuate that there's a level of trust here, right? That that we have to trust them not to make these tokens enter circulation and not to be sold, right? To help bootstrap and continue to participate decentralized network operations. Guys, this is an interesting one. Okay, this is the conversation that I had on Telegram. You're more than welcome to go check out the conversations on their official Telegram. Their official Telegram. You can go check it out. But at the end of the day, what I understood from them is that at this moment, the foundation holds 20% of the tokens, okay, which for me is a lot. That's fine. But their intention with those 20% is to basically have them staked, to have the token staked so that there is basically a base layer of validation. Right, so you want to have some nodes there validating, even if there is none available from the general market. They want to make sure there's a few. Think about a network that has no participants because it's very small, very little participants, and there's no validator. So by using the 20%, they're going to ensure that there are some validators there, so the network can operate even here in its infancy. So I understand their intention here, but then what about the transparency about who governs those 20%? Now, right now, is the TARAXA Foundation. And who is the TARAXA Foundation? Really, guys, right now, the TARAXA Foundation is board members from TARAXA. So we have to trust that the TARAXA Foundation does the right things with these tokens in the future, even in the present time. Maybe in the future when there's a lot of node validators, in this case, a TARAXA Foundation's 20% is no longer necessary. And what are they going to do with the 20%? So this is where I start to think about, well, is this project built behind a DAO? Or, you know, is a DAO the framework? And again, a response is, well, DAOs are expensive to build, and the overall infrastructure required, or the structure required, the model for a DAO requires a significant amount of investment, and not only investment through finance, but also investment in manpower. You need individuals all up in there to try to get this thing going, this DAO going. And I truly understand this, but this is one of the limitations for me, is that the TARAXA Foundation is very centralized. Okay, so we got to understand this. And this is the limitation that the SEC puts on proof of stake projects, is that no matter what, there has to be some team members and an organization running things in order to make it work, right? It's not completely decentralized, and we got to understand how this works here, guys. So now I'm not trying to spread FUD. Once again, I'm just trying to make it clear. And of course, feel free to leave some comments in the comment section below if there are any details that I'm not, explaining perfectly or in that much depth. Feel free to join the community, guys. Inform us. Obviously, I'm coming here out as a novice perspective, somebody that's just looking to become an investor. And when I look at these ideas, they become questionable. Okay, so now we have to rely on them to do the right thing. Now, there's a lot of talk about voting. And if you, again, communicate with the Telegram group and, some of the members there. And by the way, the member that did help me was amazing. Okay, I'm going to share his name with you in a second, where we'll look at their Twitter profile and all that. But just hold on for a second. The overall scenario here is about how are we going to do this in a fair way? The foundation, how is it going to run in a fair way where it's decentralized? Well, there's a lot of voting talk, right? This voting now relies on a third-party application to run these votes, which should be good. Should be good, but there's nothing carved in stone, right? And the only thing that we know here in the blockchain world that can be carved in stone is pretty much the contract, a smart contract. So one of the propositions from the TARAXA team is to get those foundation tokens into a smart contract that stipulates that they can never be sold. And I give thumbs up to that, obviously. And if that can happen, obviously there's some engineering to be had there, and that was very clear that that is not their focus at the current moment. They're focusing on other aspects of the project. But my opinion is that this should be done ASAP, because there's a lot of talk about these foundation tokens and the decentralization behind these. They're 20%. Don't knock it. And at the end of the day, we don't want to be on a trust-based system. We know what happened to trust-based systems. We want everything on a smart contract that can be transparent, decentralized, and governed by the blockchain. So if they can get this going, in my opinion, it should be done in priority for sure. Okay, so that's my take there. The foundation, a little bit uncertain here. It's not a DAO. I wish it was. And obviously, as a new team, you can't get everything. So that's important that we understand. Now, if we continue going, I'm liking this website more than the actual white paper to explain the tokenomics. The community ecosystem funds are used to ensure ongoing health and some other things. Okay, fine. It's a very small portion of this graph. You can see here it's that little sliver. And then we have this community aspect, this, the exchange and security, and then we have the community. Now, these two green things are very, very similar, but one is less than the other. I'm assuming that the community is this little piece right here, and the exchange security deposit is this 28.4%. Now, again, who owns that? Where is it from? Whose custody are these tokens in? These are things that bother me. These right now, it's listed on KuCoin. The exchange security deposit is basically some tokens that are necessary to be locked up to provide, let's say, security to the exchanges that list this token, which I totally understand. But how are they being governed? That's what I want to know. Or can they be dumped on the market? No clarity there. And we need a little bit more clarity to who controls this almost 50% of the tokens. And then the team controls another 15%. Of course, it's vested. I get it. We got to be clear about that. And then this portion right here, which is the team, the private round, and the seed round is already in circulation. And that only equates to about 30%. The rest of it needs a little bit of structure of decentralization. Now, let's continue. Yeah, foundation partner with are meant to be, they're not meant. See, this language means that there's still probability. It's not meant to be in circulation, but could it? Like, what are the conditions that are required for it to actually enter circulation? This is something that needs to be very, very clear. So when the token was first minted, okay, it was minted March 23rd, 2021, and at the end of the day, the tokens are unlocked quarterly. Okay, so add 3 months to the TGE date, and that's when tokens started getting unlocked. The seed round tokens are already in circulation, so basically 1, 2, and 3, and all this is already in circulation. Public sale, seed round, and all of this is all in circulation. The team is going to be released quarterly around this time, and we are pretty much at the 28th month of the TGE. So right now we should be getting a little bit of the team's tokens being released to the team, which fine, everybody's got to eat. I get it. The foundation, you notice that there's nothing happening here with that 20%. Who knows where that's going? Very vague and ambiguous. Not really interested in that. And then this right here, community and ecosystem. And then you can see token unlock schedule does not include staking yields, which means that those 10 billion tokens that are in circulation are going to be going up. So it's not included in this distribution. And of course, because there's a max supply. So we got to really understand that pie chart can grow and grow and grow as there's more tokens entering circulation. But again, I know we have to keep in mind that the plan is to have it decay over time. Guys, I don't know how they're going to achieve that. There's no transparency there. And of course, it's because it's a new project. This chart right now is very deceiving. It ends at 50 something percent. Where's the rest? Why is it? What's going on here? We flatlined the public sale, private sale. That's very clear in the chart above and other documentation. And then the team starts getting their tokens and the community starts getting their tokens. But where are the rest of the tokens? What's going on here? Okay, so we got to reevaluate this chart. This chart needs to be I don't know. It's not clear to me as to where the rest of the tokens are going and how they are going to be released to the general public. Okay, so I don't know, and that's because there's max supply. Again, I'm not going to press that too much, but let's move on. Okay, so this page did a pretty good job. Just know that it's in July 21 and things have changed since then, and that's something that needs to be where did they show the 10 billion? I think I saw it here. I like doing these things live with you guys. I've done my research, but I start from scratch with you guys as we go through these websites. It does really help keep it real at the end of the day. Okay, so pretty good. Okay, let's go back. Economic model. Let's see if there's anything else. Transaction fees. Okay, staking. A lot of good stuff if you're interested in, of course, the rewards, the block rewards. And this is what I was talking to you about, that decaying principle, the emissions decaying. Right now, they peaked at 20%, and they want to slowly bring it down, right? They want to slowly bring it down so that overall the tokens that are circulation are decreasing over time. But the question is, at what point are those tokens eventually gonna stop being entering supply into the supply, right? So we don't know. It's a max supply. So let's continue. Transaction fees, no slashing. Okay, great. Governance, what's that? Council, of course, there's that council. The funding, the funding that goes to the team, and the overall, the council members are basically in control of this. 12 weeks in implementation. Yeah, this is the most decentralized aspect of this organization right now, is the governance. Guys, go read into it. There's nothing more I can really say, right? So those tokens that we talked about right here, the foundation tokens, they're basically run by, TARAXA, right? Okay, let's move on. What else do we have here on the white papers? Some good stuff overall. Scaling, further reading. No, let's not do that. There's a bunch of links there. We did the economic model a bit here. So you see here it says supply is 10 billion, but it's not. We're going to look at CoinGecko. We'll look at the actual website says it's 10.2 something like that billion tokens, but you can see that it's increasing over time. So and the reward section, I think we already clicked that. Let's double check. Okay, so pretty good. Honestly, the website is pretty good. The white papers does its, why is that not working? Nonetheless, short term. Okay, pretty good. Governance to architecture, more than well. Look at that. This is where things get really technical, guys. If you're interested in this, do your deep dive, do your own thing. Scaling the world. Okay, lots of good talk. Okay, let's move on. Let's get back to the main website and see where else this thing takes us. It's like getting through a maze and going through the rabbit hole here. Use cases. So the use cases, they talk a little bit about their economy, their ecology that they got going on here. So basically, the overall projects that are being created, hype right now is their biggest focus. It's an app, built communities with precision, rewarding, sustainable social interactions and discussion, and transparency and all that good stuff. So a decentralized, let's say, community where you can basically become social. Trend spotter coming soon. Interesting. Trusted machines. And as you go down the list, these are not really projects. They're just other relationships that they may have, and that's great. Okay, so nonetheless, go check that out. And Eco, the first dApp on Eco. So basically the hype is built on Eco. Again, guys, this is just part of their overall ecosystem. Community site, roadmap, let's touch upon that for a second. They got a lot of check marks going. They're doing their work. They're doing their thing. So, all kudos to them. As a small project, I understand how much work is involved in getting these things done, and they are definitely doing their due diligence in getting their groove going. So that's pretty good. What else do we have? Roadmap, and then their coverage. What's this about? TARAXA buzz, social media, and all that. I saw a lot of good stuff about the team. Guys, you got to really understand what's happening here. These guys are the head guys of this team are Stanford professors. Okay, so in academia. And we have to understand that blockchain in DAG, in this case, stems from academia. So they have a really good tie to academia. So for me, that's a really positive thing, a really, really positive thing. And the team is amazing. Hold on for a second. Let's kind of look at their partners. They got some decent partners. Again, for a small project, they got something going on. Unicast, Springer, Acu Group. Okay, some, and then even more coverage, places that they've been, talked about, and some, hype and some good stuff. Chainlink, of course, and, all of that. So this is good stuff for a small project. Everything being done properly here. And that concludes the website, in fact, that there's not much more here to offer. Where's the team? Maybe down here. I know I saw lectures, media coverage, partnerships. Did we do that one? Yeah, we already did that. Privacy, contact, dev team. Let's do this. Now, the dev team is solid, guys. This is probably the best aspect of this project, are these dudes right here. Steven, Justin, Leo, a lot of these guys are great. Okay, so here, you fully docs. You can get on their LinkedIn, see what they're all about. You can see their Discord, their GitHub, and a lot of other aspects of their lives. So you can get a lot of info, who they are and what they're about. And what I was, interested in seeing here is that there's nobody with regards to communications, really, that's heading or spearheading communications, which is, part of the website, part of the social media, part of, communicating to the general public what this team is all about and what the project is all about. Now, if you're a co-founder and your primary role is, architecture, let's say, or building this project from the ground up, your mindset is a lot different than a regular person that you kind of need for mass adoption. I think they need somebody in here to make things a little bit more clear for novice individuals, so that there's not so much friction to understanding what's going on here, especially with regards to the tokenomics and the way the money is being distributed. We have to understand that is a big part of what blockchain, or in this case cryptocurrencies, have to offer a general society. This is great. This is good stuff. Lots of good people, advisors all involved here. They got an asset manager up in there, pretty good. So a lot of good doxed individuals, no red flags here whatsoever. Okay, so that's great. Okay, let's see what else do we have. Did we cover this? We did. We looked at that. That was great. Go check that out. Some other stuff, same thing. Let's look at their X page. All right, so they do some AMAs. Great if you're able to meet that. So this dude right here, honestly, I don't know, he doesn't represent very well, unfortunately. Like I did go on the Telegram, and I'm not trying to throw any shots or whatsoever. I'm trying to be very, very neutral here. We need to make sure that if you're going to be a positive individual to a community, that you stay positive, okay, and answer questions with respect. At the end of the day, a lot of us are not at levels, a high level understandings of what cryptocurrency is about, and we as individuals in the cryptocurrency space almost hold a responsibility to engage with people that are not. And that's the way you're going to get mass adoption. Okay, so at the end of the day, you want to be clear, you want to be transparent, and you want to be respectful of all questions. And this dude right here didn't do a great job. Okay, so if you're on the Telegram and you expect some good answers, avoid this dude right here. Okay, and if you want some, and you can see that he's really pushing, so it's almost shilling, a bit of shill, and I don't really trust any of this. Okay, so be careful. If you want some good answers, you're gonna have to wait around. Of course, this is the main guy. This I think he's the CEO. Where am I gonna find him right now? He's really, really, really good. The guy that I spoke to. I thought I saw him here. Anyways, there is some good individuals. If you see that logo, this logo right here, I think he's part of the team. Where can I find that logo again? Sorry guys, I know I'm driving you nuts. This logo right here, this icon right here, it could have been him. But at the end of the day, it's a good one. Okay, so there's a lot of good people, but you're going to have to wait around. I had to wait approximately 24 hours to get some of my questions answered. And that's, part of the issue with communications. I get it. It costs money to get people involved 24 hours a day, but a bit of transparency here. You can see there's a lot happening, a little bit more. All right, let's continue. Let's continue. I wish I was able to give you that. Let's see if I can find it real quick. If you give me a second. You know what? I'll post his link in the description, if anything, and you can go check it out on the Telegram group. Some good conversation. Okay, let's move on. I don't want to bore you here. Let's move on. Let's get right into the infographic. All right, guys. So I prepared this for you guys just to give you a synopsis of what I'm thinking about TARAXA. TARAXA is obviously a great project, and it does have some great fundamentals, but we got to bring and shed to light some of the issues that it may have. And I'm not trying to spread any FUD here with this review, but I just want to be as transparent as possible and ultimately, bring some of these things to light. Now, we did talk about an overview. It is a EVM compatible smart contract network. Okay, that's what it really wants. It's not really blockchain platform. It is a DAG platform using T-graph consensus mechanism. Okay, so that for me is a very important thing. It has a good amount of potential for lots of dApps to be built, right? Because it's a smart chain platform. Track the movement of goods, material, a lot of supply chain right now being issued on the chain, so a lot of supply chain applications, but there's a lot of future here, potential for TARAXA. The ecosystem. Okay, so we got hype. Okay, Hype is definitely one of their main, and TrendSpotter. Okay, so I give it an 8 out of 10 for a small project. They got things going, so I'm happy with that, and there's more coming soon. The utility, of course, the utility Terra drives the network, such as gas fees and rewards and all of that good stuff. But at the end of the day, the yield is where you expect a lot of things happening here. Okay, the yield is where you're gonna get tokens and all of that good stuff, and you're gonna be able to buy and sell using these tokens. So it's basically a utility token at its finest, right? So pretty good. At the end of the day, it's very typical utility, nothing very scary here, and actually implemented pretty accurately, and I'm comfortable with the utility. The roadmap, I expected a little bit more with regards to the TARAXA foundation. The actual foundation itself needed a little bit more clarity as to what they plan on doing with that. Not relying on Telegram or Discord or anything to give us snippets of the roadmap with regards to the foundation. We need it in writing. We need to really understand what's going on with the future, because they do hold a significant portion of the tokens right now. It's 20%. So we need to know what's happening with the foundation. Roadmap is clear though. The rest of it is clear, and their timing is on point, and they are meeting a lot of their objectives for 2023. So pretty good. But again, the foundation, the team itself is 10 out of 10. Guys, I can't give you any more. You saw a lot of good talent there, full stack developers, blockchain developers, Stanford professors, a lot of good stuff there, a lot of intelligent individuals that are very capable. So 10 out of 10 for that. The socials, pretty good with regards to the X followers, for a small project, 24,000 followers. Lately they've been getting a significant amount of traction with regard to their following count. So this is a sign of interest from the general public. 4.5 thousand new subscribers, so basically up 3,500% in the last little while. So that's pretty good, meaning 30 days, which is great. However, the amount of tweets or posts that they've been posting on X basically has decreased a little bit in the last little while. And I understand the bear market is rough, and it's hard to keep going, and the marketing dollars are thin right now, and I understand that. But nonetheless, that's part of the name of the game. Bear markets are meant for building, and you got to keep that social media up. So overall, not bad. In fact, I think I was a bit harsh here with that 7, but nonetheless, there's still area for improvement. So not bad. Okay. Tokenomics. This is where honestly I created a version of this infographic that gave them a 1 out of 10, and I had to stay up last night until about 2 a.m. to actually resolve some of my issues. I went on the Telegram and I played a very novice role. I wanted to hit the person that was part of the team to explain it to me as I was a 5-year-old. I wanted to be a very basic, explanation. And the dude did a great job, and he was very patient with my ignorance. And at the end of the day, he basically spelled it out to me perfectly and took the time, which was great. Okay. But nonetheless, it just shed some more light on the things that still need to be resolved and need to be clarified. Okay. So really, the reality is of the 10 billion plus tokens, 30% are in actual circulation. Okay, the other ones, the rest of them are staked, vested, controlled, whatever you want to call it. They are basically put away. And being put away starts to, raise a bit of interest as to how are those that are put away being controlled and by whom, right? This is where we want to get a little bit more clarity. The foundation tokens and the fact that there's no max supply and it is inflationary, there is some clarity that needs to be introduced, or some way of informing individuals that there is a decaying principle that needs to be implemented and that could be implemented in the future. However, are we going to just stand here and keeping our fingers crossed? This is the problem here, guys. When you're in new projects, when you're getting into a new project, a lot of the things that need to be implemented have yet to come, and you have to be patient. If you are going to wait for all those little things to be tied up and basically perfect, the project price, basically the Terra token, is going to go up in value by the time all of that is clarified. So you have to understand that your risk appetite right now has to be in check with the fact that this project is not bulletproof just yet because it's new, and that is why the price is so cheap. In my opinion, it is undervalued. Okay, however, based on that idea, you are going to be taking risk with regards to its tokenomics and its overall structure with regards to decentralization and centralization. Okay, there's a little bit more clarity that obviously that can be done by the team. But with the conversation that I was able to get to try to get some of the clarity, I still have some apprehension. Okay, so obviously, guys, if you're part of the team or if you're part of the community and you know a lot more than I do, which I'm sure there are individuals, feel free to join a live stream. Feel free to make comments in the comment section below and let me know what you're thinking. Okay, so partnerships, of course, as a new team, this is based on a new team. They got a lot going on. Obviously, no heavyweights and nothing really that crazy, so I give it a 7 out of 10 and also a 7 out of 10. And I like the fact that at least they're on KuCoin. KuCoin could provide a lot of that liquidity that we are looking for here, guys. Mexi's up and coming, of course, doing okay. Gate, I'm not really interested in Gate, not my thing, but a major exchange, we're looking at Binance perhaps in the future, maybe, and maybe Coinbase or who else, you never know. Right now there's still some room for growth with regards to tying themselves up with other major exchanges. Okay, so overall, that's my that's my verdict with regards to these categories. And the price, 0.007, very, very small. The price is very low. Don't hinge upon the price when you're looking for entries or trades or anything like that. And of course, we'll talk about the price action in a second. Market cap, 20 million market cap, guys. Obviously, right now, this market cap idea is a little bit everywhere because the overall max supply is a bit off depending on the websites that you go visit because they haven't been updated. Right, the max supply should be right now about 10.2, and it's not really a max supply because there is no max supply. In fact, this should be a total supply, and I should update this. Right, it should be a total supply because the max supply there is none. In fact, it could be indefinite, right? Tokens could be entering circulation as much as need be, right? In this case, that's one of the issues that a lot of people have with this token. So we can see that the trade volume is super healthy. Super healthy. The trading volume I really like. In fact, it was a lot better just a while ago. I think it came down significantly in the last little while as Bitcoin did come down. So when you see a lot of trading volume, you kind of like that. That there's value going in and value going out. There's liquidity. That's a very healthy market. So I'm very, very impressed with that type of volume. Market cap of obviously it's only a $20 million market cap, guys. And if you look at the fully diluted, is 71 million, guys. There's a lot of room here to get this project going to higher levels. Of course, right? This is in its infancy, and you can tell by some of these categories that I'm talking about, they're still working, they're still building. And of course, taking a bit of calculated risk could definitely yield some good profits here on such a young project. Okay, so the supply right now, the circulating supply is approximately 2.9 billion, and the rest are tied up, like I mentioned, tied up somewhere, whether it be in the DAO and the team and the this and the that, they're all tied up, and that's where we need a little bit more transparency in decentralization. Okay, so let's move over to my verdict here. My overall verdict for the project right now is essentially saying, the team did a great job overall. Okay, the website is well established. Okay, really well established. The team is probably one of the better teams that I've seen out there in the last little while. But nonetheless, we have to be aware that there are some negative aspects that need to be clarified. Okay, it is a layer one that, aims to be a better smart contract platform. Guys, that's a big thing right now. Like, if you think about it, they're trying to compete with Ethereum, which there's a lot of Ethereum killers out there, and I'm expecting Ethereum to get its fair competition right now, right? There's going to be a lot of competition. It's healthy to get Ethereum put in check. Guys, remember those gas fees in the previous bull runs? Those gas fees were crazy, and this is the issue here, is that we're trying to find solutions and a lot of EVM compatible projects out there to say, you know what, if you are tired of Ethereum, come over here and bring your entire project with you, because guess what, we speak solidity. So that's perfect. That's great. It's a combination of proof of stake and Byzantine fault tolerance, BFT. Guys, this is a very technical thing. I'm not even going to go there. I'll be honest. I'm not going to go there. Do your research if you're a very technical individual and you're into your computer science thing. But here on the channel, I want to keep it very open for everybody to understand. Strong value proposition. Again, the EVM, low cost transaction, no network congestion, true decentralized and fast. This is the true decentralized decentralization that kind of bothers me. I'll be honest. Okay. Ecosystem is limited. Of course, it's a new project. I'm going to kind of defend that statement because the reality is it's a very new project. Foundation tokens are not governed by a DAO. Okay. Again, part of the concept that it is a new project, and to get a DAO going does require a significant amount of efforts, but no clear roadmap for the foundation and how things are going to be governed, especially with regards to those foundation tokens. Okay, so a little bit of ambiguity there and a bit more of explanation and structure would be great, and governed by blockchain technology rather than, or cryptocurrency or decentralized authority rather than a foundation with a a team. Trading volume is even amazing even after the decrease. Okay, so I'm gonna just say that you like a team that has, or a project that has a lot of trading volume. Team is strong, guys. Ties with academia. I love that they have a lot of experience in the blockchain field, full stack development and engineering, and they're fully transparent on LinkedIn. You can get right on LinkedIn and you can get to know all of them to a certain degree, obviously, but really good. A lot of projects nowadays feel that they don't need to be fully doxed, and for me that's a negative no matter what, especially if you are a proof of stake platform. You need to be fully doxed. Okay, there's a level of decentralization or centralization that POS offers, and of course it comes with its benefits, but you need to be fully doxed regardless. Roadmap is great, website is clear and well designed, socials are strong, demonstrating interest. Of course, guys, thousands of interactions in the last little while, in the last 30 days. And the partnerships are appropriate for its size. Again, a lot of this conversation has to do with the infancy of this project, and at the end of the day, as it grows, you're going to see a lot of these partnerships and connections that it has with other organizations improve over time. Now, what about my actual price target, guys? This is the most difficult part of this entire deep dive. Okay, this entire deep dive for me is very difficult because I start to think, look, if it's going to be an Ethereum killer, let's call it, or competitor, is it actually going to get there? And let's be modest. I always try to say, let's say it's going to compete with Cardano, ADA, and for me that's okay, very possible. Then we're going to talk about, what about if it competes with HBAR, right? HBAR right now is getting some good traction. And what about if it competes with HBAR? And then you start to look at, okay, these are, smart contract platforms. Okay, they offer a very similar value proposition, let's say. And in this case, you look at this potential growth. One of them you can get with, comparing it to Cardano, 361%. That's crazy. Or 361x. That's insane. And of course HBAR 84x. Now, what about if we just went to $1, right? And if the price could hit $1, guys, you're looking at a good run up. And at the end of the day, in this bull run, what you kind of have to do is not really shoot for the stars, because that's how you're going to get wrecked. You're going to have to wait for a few bull runs for this thing to catch up to Ethereum in my book. So if we can get even remotely close to $1, which would be a little bit more than, maybe passing HBAR, it could be possible. But remember, HBAR is also going to grow. So I'm not trying to bring down HBAR whatsoever. It's going to, think about the total market cap right now. It's at about $1 trillion. At bull run, we were at 3 trillion. And at the next bull run, we should be higher. We should have more growth, maybe $4-5 billion. And in that case, both HBAR and ADA and TARAXA will grow. But the question is, as TARAXA is a smaller cap project, the growth is going to be a lot easier and a lot faster, and you're going to get a lot more volatility. And it could be that eventually TARAXA gets to the current level of Cardano, or even the current level of HBAR. HBAR obviously is going to grow and surpass because it's been around and it's established and it's doing some good stuff. But if it reaches $1, if TARAXA reaches $1, guys, that would be a great opportunity. All right, guys, here I give it 7 out of 10. It was a bit low. I get it. And of course, I have to be real with you guys. I'm not trying to, spread any FUD or anything. I'm trying to be very objective. And at the end of the day, non-biased approach is the best approach here in the crypto space. All right, guys, I know you're here to talk about charts. Let's do a quick update with regards to the price. Let's see what's happening with TARAXA. What would I be doing in the next little while with regards to building a position? And yesterday I was looking at this, and I was looking at this little sideways sideways accumulation range that we've been basically producing in the last couple of days. Now you can see in the last 4 hours, this is the 4-hour time frame, we've been coming down in the last little while, of course, within this channel, and I still feel like if you look below, we do have some weak spots. The weak spot is this volume gap down below. If we do break below approximately 0.006, you can expect that the TARAXA price could come down to the bottom of the range and start hitting these lower levels. Given that there is no supply and demand here at this zone, you can see looking left, we went straight up, which means that if we break below, we can come straight down and test these lower levels at this level of support of, horizontal support. So it's always very important here that we anticipate, that we could come down, and make sure that you reserve some dry powder to buy the dips at lower levels. Guys, this could be considered a bear flag. We came down with one leg, consolidate going sideways, and maybe a continuation to the downside is due very, very soon. So what I can see here on the 4-hour is that the momentum did definitely reset. We got to oversold conditions, okay, with not much strength, but we did get there. We tagged in that 30% mark, but now we're getting a bit of relief to the upside. Could this just be a slight dead cat bounce? And then we come back to oversold conditions once again. And then finally, maybe break down a little bit further. So this is what we got to be worried about, is the 4-hour time frame. The daily overall is bearish. Okay, it is bearish, and I was expecting a little bit of a mean reversion play to the upside, given the fact that the RSI the momentum did come down very, very aggressively, hit this level of horizontal that we had in earlier, okay, and we actually hit this pretty good. Now I'm expecting, let the EMA, this yellow line, catch up to the momentum line of the RSI. And how that could happen is seeing the momentum actually bounce to the upside, or it could just flatline and go sideways and wait for the EMA to catch up and come down. And right now it could be potentially a flatline situation. Right now we see the RSI stopped in the 50% mark, which is the chop zone, which means that it could go sideways for the next little while. However, what about if it continues coming down? We can see that we can get into oversold conditions and start hitting these lower levels. Okay, guys, so be very careful here on the daily time frames, but on the 4-hour, it could be that we are looking for a bit of relief to the upside. We did fully reset. The MACD is getting its crosses, but look at this. Look at this. This is indicative of just a bit of relief until we get a continuation to the downside. So if this EMA crosses down, we see some red histogram bars. Guys, it's not looking the greatest. You got to be honest. And the EMA and the RSI right now, although it's lifting up, what we're trying to see here is if we're going to come down and back test this level, either create a lower low on the RSI, or if we create a higher low on the RSI for a potential just a back test of momentum and then a continuation to the upside in the short term, right? Just in the short term. And what I mean by that is potentially the price could come back up to the breakout level. The majority of the market that went short entered this level of around this level, and to induce max pain to the market, we're going to have to come back to this zone once again, right? It could be even as high as about 0.009, give or take. We do see a lot of supply and demand here, and a lot of good levels of horizontal support, or in this case resistance, if we do come down and we do go up and get that dead cat bounce, a bigger bounce to the upside as some relief. But overall, guys, on the daily, I'm expecting more continuation to the downside eventually, and this is why I'm prepared to buy the dip at lower levels. I'll keep you posted on TARAXA, guys. If you appreciated what I offered you today in this deep dive, do the channel a huge favor, slap that like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to follow me on that Discord. Join the Discord, guys. It's a great place, great community, and if you have other ideas or deep dives that you want me to cover in future deep dive videos, feel free to join the Discord, and there's a channel there where you can make those requests, and I'll definitely keep those in consideration. All right, guys, take care, have a good one, and don't forget, buy the dip.